Hello everybody. A lot of people are reaching retirement these days without any idea how to invest for current income. Generating enough sustainable and repeatable income during your retirement years, that has to be a top priority. Still, the challenge is that interest rates are still low. Stock markets can be crazy. And everyone on the radio wants to sell you life insurance and annuities. Well, there are better answers. Common sense investing strategies and solutions, the kind that are widely embraced by the very wealthy and the well-informed. And I am going to tell you what they are. This is good information that you probably aren't hearing from anyone else. Nobody should put all their money into any one company or in any one strategy. So we use at least 7 different strategies when we build our clients' retirement income portfolios. Let's look at them now. Income strategy number 1, we build portfolios of high-quality, blue-chip, dividend-paying companies. Not just 1 or 2 companies, but we want to own 10 or 20 high-quality companies with a long record and a commitment to paying their shareholders, and a record of increasing their profits and their dividend payments each year. 10 or 20 of America's great companies, each paying us cash dividends. We don't have to worry about whether their price is going up or down. We can be very patient with them because we're being paid cash dividends for holding them. And that's a good strategy. Second, we also like preferred stocks for their preferred dividend income. Preferred stocks generally have a higher dividend and the company has a higher commitment to that dividend. Preferred stocks in some ways are like a cross between a stock and a bond. Third, we like real estate investment trusts, or REITs or REITs. These are companies that own income-producing real estate. REITs are special in many ways, including that they pay no income tax at the company level if they will distribute most of their income to their shareholders. And that means that REITs tend to be high dividend payers. Plus, the new tax reform law for 2018 creates an opportunity for REIT shareholders to get some extra tax relief at the shareholder level. That's a really interesting tax angle, so schedule your strategy session phone call with me if you'd like to explore this more. Well, we like REITs that invest in housing, or storage units, or warehouses. Think of all those online purchases that are made today. We call it the Amazoning of America, of the world really. All that merchandise flows through a warehouse somewhere. Those warehouses are often owned by a REIT investment that passes that income through to our retiree investors. And speaking of online purchases in the internet, we also speak of the cloud. Well, guess what? The cloud is not in the sky. It's in buildings, computer data centers around the world. And those buildings are often owned by investors who collect rental income. We like REITs that invest in healthcare properties like skilled nursing facilities, assisted living centers, and hospitals. The REITs don't actually operate these facilities, they just own the real estate and collect the rent. Aging baby boomers, now ages 52 to 72, provide a nice demographic support for this type of income-producing investment. Next, we like oil and gas pipeline companies. We have thousands of miles of oil and natural gas pipelines in this country, and they are owned by pipeline companies. These companies are largely structured as master limited partnerships, or MLPs. Similar to REITs, MLPs pass the bulk of their earnings through to their shareholders as monthly or quarterly distributions. And that spells high income for investors. And as long as oil and natural gas are needed in the world, pipelines will be needed to move it. Business development companies, or BDCs, represent another retirement income opportunity. These are companies that provide financing to other companies. In a similar way, they pass the bulk of their profits through to their shareholders as a distribution. We like closed-end funds, or CEFs. These are unique mutual funds that can invest in stocks or bonds that produce high income. But the magic is that these funds can often be purchased in the market at discounted prices. Buying at a discount means we purchase shares in the marketplace for a lower price than their net asset value or internal value. It's like buying $10 worth of stocks for maybe just $9. And I like to buy at a discount. A discounted purchase price means an even higher income for the investor. And finally, bonds can balance a portfolio and produce income as well. Bonds are issued by companies and by the federal government, as well as by states, cities, universities, and more. Interest received on corporate bonds is taxable, but interest received on municipal bonds can be totally tax-free, and that can be a real help to retirees. You can maybe imagine how it might feel to be retired and to have a broadly diversified investment portfolio that includes 10 or 20 blue-chip dividend-paying stocks and preferred stocks and real estate companies, including housing, storage units, warehouses, data centers, hospitals, skilled nursing centers, and assisted living centers, and oil and natural gas pipeline companies, business development companies, and closed-end funds, and bonds, and more, each of them paying you regular, recurring dividend income. The income not only repeats itself over and over again, but it can increase each year. And this is key. When the market goes down, as it always does, you never have to sell your shares in order to collect your monthly cash deposit to your bank account, because your income comes from the dividends that the shares produce every month, every quarter. At some point you start to relax, knowing your income is diversified. The market still fluctuates. It goes up and it goes down, but it doesn't worry you, because the stock market is not your dividend. Your income doesn't fluctuate up or down with the daily changing stock market, and that is a feeling of retirement security. So which strategy is right for you? Well, probably all of them. When we build a portfolio for a client, we often draw on all of the strategies, each one weighted differently according to how aggressive or how conservative the investor needs to be. To some degree, and in different proportions, every retiree investor may want to tap into all 7 strategies. Today's retirees live longer. They play harder. They travel. They serve. They live life to the fullest. At least that is what they want to do. But if we are constantly stymied by low bank interest rates or worried about the stock market rising or falling, then it is very hard to fully enjoy your retirement lifestyle. So how about you? How will you live in your retirement years? Do your investments produce the cash income you need? Or will you risk spending down your principal? Or will you begin to invest like the billionaires, adopting a diversified, managed income strategy? For 35 years, we've been helping clients to produce the investment income they need so that they can live the retirement lifestyle they want. That is what we do. It is our passion. So let's jump on a phone call together. Let's see how we can help you. You'll notice we spoke in concepts without specific investment recommendations. That's because we can't offer specific investment recommendations until we know you a lot better. And of course, you shouldn't want our recommendations until you get to know us better. And that's why we ask you, we invite you to take the next step. Click on the scheduler icon and let's have a personal one-on-one telephone strategy session. The telephone appointment is your no-cost, no-obligation way to find out if you want to work with us, and for us to know if we would be right for you. If it works out, we'll set a time to meet here in our office in Pleasant Grove. Or if not, well, that's okay too. We can part ways as friends and you'll go away with a broader perspective on your retirement future. So it's very simple. Just jump on my calendar and schedule yourself for a strategy session phone call with me. Now, I hope this short video training has been a good start. I hope you found it useful. Thanks for watching, and I look forward to hearing from you.